All right, today is Tuesday, August 2nd, 2022, and it's time for the monthly portfolio review. The biggest news for the month of July is that I did not win the $1.3 billion Mega Million lottery jackpot. So I'm still here, but that's probably the biggest news of the month. In terms of portfolio, my portfolio year to date through July is down about 6.2%. This is compared to the S&P 500, which is down 13.9%. This is a huge improvement over last month, as we had a great month in July. In terms of portfolio allocation, I'm still 35% in cash, about 12% financials, and the balance is spread between a risk parity style allocation that I'm moving all of my funds into. Aside from that, the big news for July is that it was a great month for stocks. I mean, the S&P 500 was up almost 7%. They say that it's the best month since the pandemic by far. And it just goes to show that, when you have a great month like that, it can really lift the markets. So we had a bad month in June, but then July turned around and did great. And this brings me to one of the topics that I kind of want to talk about for this month, which is that you should stay invested. So the research has shown that if you just miss the best 10 days of market returns in a year, you lose out on something like 90% of the gains for that year. So it shows the importance of being invested. Now, I should be practicing that, but with such a large cash cushion, it's obvious that I'm not doing what I'm saying. But, I am in the sense that I have a plan and I'm sticking with it. So it'll work itself out. And I'm doing okay compared to the broad market at this time. So it's fine. But I think the lesson to be learned is that when you miss some of the best days in the market, your returns are going to suffer. And July was such a great month that if you were on the sidelines, you could really miss out. I think I lucked out a bit because I had some holdings that did really well in this month compared to the rest of the market. So it certainly helped me. The other big news for July is that inflation was just still super high. I mean, I think the annualized reading is like the highest in 40 years or something like that, some 9%. And last week, the Fed raised rates again by 75 basis points. That's 0.75% to the Fed's fund rate. So it's a clear sign to me and to many others in the market that they are aggressively fighting inflation, which is a great thing. Whether or not it's going to work is anybody's guess, but it's a good sign, and I think the market has reacted favorably to the news. I think we're going to continue to see a couple more rate hikes for the rest of the year. Whether it's going to be this big, who knows? But when you have Fed funds rate rising this much, it's going to affect things like credit card interest, mortgages, all kinds of things, as well as bond yields and prices. But it's good to see them fight it. There's also talk about whether or not we're in an inflation for the economy because the second quarter GDP numbers came in and it was also a decline in growth. And by some measure, if you have 2 quarters of GDP decline, that's a recession, even though that's really not the definition. The arbiter of a recession is the National Bureau of Economic Research, NBER, and they look at a broad-based measure of just economic decline, not just GDP, but unemployment and other things like that. And they really are the determinant of whether we're in a recession or not. And so far, they've not called one. So anybody's guess if we're going to go into one. But it doesn't look great. So we'll see what happens. The Fed is now not even targeting a soft landing. I think Jerome Powell is calling it a soft-ish landing, whatever that means. But we'll see. So that's kind of the month of July for the portfolio. I'm looking to make my buy-in sometime next week into the portfolio for the $1 million portfolio. So I'll put that up when we get there. I didn't miss the buy-in for this month only because I was busy and I had other projects that I was working on. But missing a month of buying is not going to kill me. I should be fully bought in over the next, call it 16 to 17 months, and that cash cushion should go to pretty much zero. So let's see what happens over the next 6 months, rest of the year, and then into 2023. But that's what I have for this month's update. Hope you enjoy, and I'll see you soon. Later.